how do you manage your own super fund?
You can just ask your accountant to set up self-managed super fund for me and roll your existing superannuation funds in. And you can either do it as an individual or you and your partner can roll them in together. There's a little bit more paperwork and hassle than if you don't do a self-managed super fund. But the reality is, like, if you look at the wealthiest, top 5 or 10% of Australians or really around the world, they all do this themselves, because the reality is no one cares about your retirement more than you, or no one cares about my retirement more than me. So that's why it's really, really worth learning these things, as well as worth changing that structure and taking control of it, yourself. Because if you're with an industry super fund and you're their number 364,000th client, like, how much do they really care about you? The answer is probably not a great deal.
Greg Cassar is a self-made Australian digital marketing strategist and investor who's helped over 350 businesses generate 2 million leads and more than $500 million in online sales.
He's the founder of the Collective Mastermind and lives a true lifestyle by design life.
Greg, welcome to the Site Shed podcast.
Thank you, Matt. It's great to be here.
All the way from 20 minutes down the road.
Yeah, we just figured out that we live in the same part of the world, which is pretty cool. It's a great part of the world, though.
It is. I'm not sure if I've had anyone on the show from Northern Rivers, so it's, there we go. Could be a first.
Excellent.
Thanks for joining us today. For your listeners and viewers out there, we're going to be discussing some few conversations around investing and essentially what you guys can and potentially should be doing with the money that you make within your business. And I'm guessing, Greg, correct me if I'm wrong, so that you're not 100% dependent on your business.
Agreed. Like, I think as business owners, often we focus on just running the business and growing the business, and a lot of our energy just goes there. But often we don't really wake up and stop and think, hang on a second, am I getting my money growing for me as well? And that's really that transition that I had about 10 years ago, and then found that to be life-changing. So Kiyosaki, Robert Kiyosaki, he had a famous book called The Cash Flow Quadrant. And in that, it teaches that you can get wealthy any number of 4 ways. So you can be an employee, you can be self-employed, you can be a business owner, or you could be an investor. And then as you get further into it, realize like any number of combinations can also get you wealthy. So you can be an employee who's also an investor and get wealthy. You can be self-employed who's also an investor and get wealthy. But if you look at most billionaires in the world, they've all got the same combination. They're business owners and they're investors, really, like, without much exception at all. So that's kind of like success leaves clues. If you can be a business owner and also an investor, that's really going to set you up a whole bunch better than if you just focus on, hey, I've got to run the business.
Yeah, I mean, I suppose we have that advantage when we run businesses where we're not limited by things like asking for pay rises and, so on and so forth. Like, if we want to make more money, we just do what we have to do to make more money, and we kind of can be in control of that a lot more. And I think that what I've absolutely fallen into the trap in before, and what I see other people falling into the trap with, is like letting that money that you generate within your business just sit there and get eaten away by inflation in a bank account or something along those lines, or that whole like, oh, I've got to buy a home to live in, and they're buying it, and then you're this handicap on lending for the rest of their lives, that kind of thing. So,
Isn't that right?
Yeah, so I'm super keen to dive into this conversation because it's pretty timely for us too. We've just sort of gone through some whole new things with financial advisors and investment strategies and all these different things. So yeah, I think this is very relevant to a lot of people out there.
Yeah, I'm not a registered financial advisor, like according to the Australian government. I'm just really an entrepreneur and investor and coach who's had some good runs on the board, and then I share what I've been learning and doing. So obviously seek your own financial advice. But what I've found is like that we need to ultimately think about multiple investment vehicles or buckets. So you can invest as an individual. So whether you're buying shares or property or crypto or whatever it is, you can invest as an individual. You can invest as superannuation, which we'll talk a bit about in a second. And you can also invest like within your company. And each of them has different pros and cons, right? So what I do primarily is I do like investment in personal. So building money that I can get access to now, but building a big golden goose. And then also within superannuation. And within superannuation, most people make the mistake of they don't take it over themselves and do what's called self-managed super fund.
Mm-hmm.
So the average person's superannuation grows at about 8% a year. But if you look at what's actually happening there, it's getting gobbled up in fees, say, for example, 2%, and then you might have like 3% inflation for the year. And so all of a sudden, hang on a second, your real money's actually only grown by a sort of 3% when you sort of think it's growing by 8. That's a common trap. So at least by taking over and like learning and managing your own superannuation as a self-managed super fund, you can then look for higher growth things. And we'll talk a bit about how I do that in a sec. But so that you can outperform the control, because if you're only growing at 8%, you're kind of just being more gobbled up in fees. My wife, Jules, and I, we had our super before we went self-managed for like 10 or 15 years or something like that. It was kind of just going up and down, and it didn't really go anywhere at all. And then when I took it over myself, like my accountant said, he's never seen anyone, grow it faster than that. And how I did that was by like, Matt, are you familiar with Wayne Gretzky? Do you know who Wayne Gretzky is?
My wife's Canadian, so
okay.
I spent a bit of time in Edmonton, so I know exactly who Wayne Gretzky is.
Okay, excellent. But for the listeners, not everyone would know Wayne. So he's a famous, ice hockey player, and his famous interview where they're like, hey, Wayne, you're obviously the best, clearly better than everyone else. How is it you're doing that? What are you doing different? And he said, it's easy. Everyone skates to where the puck is, and I skate to where the puck is going. So he was able to really foresee other things that others couldn't see, and then be there, on time to really capitalize on those opportunities. Mm-hmm. And that's how I've really changed my life as well with investing, was by figuring out, okay, well, where is the world going, and what are going to be the winners within that? So my particular background has kind of been a lot of tech stuff. So I was in IT, and then I got into marketing and sales and stuff, but on the internet. So all tech based. So that kind of gave me a little bit of an advantage. I understood tech and I understood where the world was going. So then I asked myself the question of hey, is the world going more digital or less digital? Okay, it's going more digital, right? And then so that's okay, well, I'm going to really focus, in those areas. And then within that, so there's the concept of the 80-20 or the Pareto principle, what's the 20% of things that are going to give you 80% of results. Mm-hmm. So then what I did was then figure out, okay, well, what are winning categories, within that I could invest in. So AI and tech stocks ended up a big one. And then the thing that really changed my life was Bitcoin and crypto. And I think a lot of people don't necessarily understand those things well, so we can go deep into any of that you want. But so figuring out, hey, where was the world going? Then what were the winning categories? And then kind of what are some of the winners within those? And then holding things long term, removing all emotion from some of these things are highly volatile, so they'll go up and they'll go down. But just if you're playing a long game and you have conviction and you know what you're doing, then it's really about getting your money to compound over and over again. So if you can achieve a 30% growth where you turn 100K into 130, but then next year you've got 130 that turns into 170, and that kind of thing. So long-term compounding has really, really made a difference for me.
Yeah, I mean, I guess that's probably the common difference between from what I've read anyway, what we've always done, it's more long-term investment strategy as opposed to the day trading mindset where you're in and out and trying to make. I mean, look, when crypto came around, I remember it sort of became like modern day gambling. We'd go to the pub with mates, have a couple of beers, and we'd sit there and we'd buy cryptos and then sell them, as a bit of a joke. But I guess conceptually, as you're alluding to, and you see this quite often with, those, referring back to Robert Kiyosaki, I suppose, when the whole thing is about compounding, growth and that kind of thing. You need to be in it for the long game.
Absolutely, yeah. So, and that's what's good about superannuation and self-managed super fund as well, in that.
Quick pause for a second. If this episode's hitting home for you, do us a favor. Please give it a follow on this app. And if possible, please share it with someone that you think would also benefit. This podcast was brought to you by Tradie Web Guys, where day in, day out, we work with tradies and contractors that are looking for predictable, manageable, systems to close more jobs and scale with consistency. It's a proven system that's focused on closing more jobs, not just generating more leads. We have loads of case studies and reviews on the website to back this up if you want to go check it out. If you like the sound of predictable, manageable, and consistent growth, click on the link in the description or head to tradiewebguys.com.au and start the conversation. All right, back to it.
You can't touch it, so you're kind of forced to just keep compounding it and compounding it. So that has been great. I talked about like Bitcoin has really been the big thing that's changed my life, and a lot of people don't really understand it. I back in 2017, I still remember it was a Tuesday and it was 3:12 a.m. and I just sat up in bed and I was like awake, and I just really figured out Bitcoin, and I woke up my wife to tell her about it, and to say that she wasn't as excited as me was an understatement, Matt. Like, she definitely just told me, go back to bed. I don't want to hear about this. But I couldn't go back to sleep. I was just too excited because what I'd figured out was, right, that effectively that digital gold concept. So why does gold have value? Because it's scarce and people want it. And so Bitcoin was the same. Like, it's scarce because there's only 21 million and they can't ever create more without majorly changing it, which they're not going to do. And then it was global, like people all around the world wanted it. And I could also see that over time, that it was going to be banks and corporates and companies and everything. So I had the opportunity to front run like a lot of large corporates and stuff. So meaning, skate to where the puck is going, buy now and then hold long term. And then it's just multiplied over and over and over again, over that course of that eight or 10 years. And then some people will think, hey, I'm late now. I'm still too late. But there's no way that you are. Like, I think anyone who's listening, if you haven't spent the time, definitely spend the time to learn it. Just go on YouTube and go down that rabbit hole of, learning about Bitcoin, because everyone will spend, they'll work for 40 or 50 hours a week in their business, but they won't spend 40 or 50 hours learning about wealth creation and how something like Bitcoin works, which can be really, really, life-changing, I've found.
Mm. Yeah, I guess it's because it was so new and volatile and unknown and deregulated and all these kind of, different things. But I mean, off the back of that, of course, the whole blockchain infrastructure is just around the world has basically exploded, and it's sort of everywhere now. There's been a lot of serendipities off the back of that, which sort of leads into Ethereum and all these other sort of coins and so on and so forth. So yeah, I mean, you're right. You got to go learn these things. But I guess the question that I would have, especially in relation to self-managed things, is where do you learn these things? If you're not a financial advisor or a trader, how do you manage your own super fund?
So you can just ask your accountant to change your, hey, can you please set up self-managed super fund for me? And or there's other companies that can help. We help some people do that. And then you can roll your existing superannuation funds in, and you can either do it as an individual, or if you're married, like you and your partner can roll them in together, so that you've got one self-managed super fund. Because a self-managed super fund is a little bit like a company where you've got paperwork and it's got taxes and stuff like that associated with it. You probably need at least everyone says something different, but probably $100,000 or whatever to kind of make it worthwhile to then, be able to get it growing. So there's a little bit more paperwork and hassle than if you don't do a self-managed super fund. But the reality is, if you look at the wealthiest, top 5 or 10% of Australians or really around the world, they all do this themselves, because the reality is no one cares about your retirement more than you, or no one cares about my retirement more than me, sort of thing. So that's why I find it's really, really worth learning these things, as well as worth changing that structure and taking control of it, yourself. Because if you're with an industry super fund and you're their number 364,000th client, how much do they really care about you? The answer is probably not a great deal.
Yeah. I mean, I guess what I meant by that question was how do you learn these things, what to invest in, what not to invest in? When you're going up against, a managed super fund where you're just expecting that people do know what they're investing in. And obviously you can select your risk profiles and all these kind of things. But Like, what's to say someone who's never done it before can come in, manage a self-managed super fund and outperform someone who's been doing it for 100 years?
Yeah, that's true. So, and that's where I guess everything starts with education and what we spoke about before, like knowing where the world is going. So AI is only going to get bigger. Bitcoin is only going to get bigger. Crypto, but crypto can be risky if you don't know what you're doing. Like there's a couple of clear winners within it. So, like, what are those categories? And for some people, like, it's not my area of expertise, but property can be amazing as well. So choosing like an area or a discipline that you're going to specialize in, and then just doing the hours, going deep down the rabbit hole. There's a YouTube channel. There's a guy called James who runs a YouTube channel called Invest Answers, and that is an excellent spot to start. Like from an education point of view. I have YouTube shorts called Business Invest Freedom. I teach this stuff as well, but I don't post as often as him. This guy's a freak. He, like, literally, doing it every day. I don't know how he puts out a 40-minute show every day, but he does. But that's a great spot to start. But I think it all starts with education, and in some ways, it's about a mindset of like, waking up to, hey, if I just do my business, that's going to help me achieve a certain amount of wealth. But if I can change my mind to, I'm no longer just a business owner, I'm now a business owner and an investor. And if I don't know it now, I'm going to do whatever it takes to get there. So it's kind of like that mindset change, and then just be willing to go down the rabbit hole, and start learning, or get access to a coach who's already got good results, who you can then kind of like copy trade, you know what I mean? As far as just see what they're doing and do a similar sort of thing. That can often help people to avoid mistakes, because I found that there's two things we need. We need cash flow. So if you think about it, like from the business or your own personal P&L, like, man, you might have your mortgage and your cars and your bill, you got to feed the kids and all that kind of stuff. So you need cash flow. And then ultimately you need to be able to then be building a large net worth. So a pile of money that you can then sort of live on or use later. So, because I've had times in my life where I've been stressed because I didn't have enough cash flow. And then I've been times in my life where I've been stressed because I wasn't growing that net worth. I wasn't building that, big golden goose. And so, like, I've got to 50 years of age now. So I really have to think about, well, not just the cash flow, but am I actually putting enough aside? And then really getting clear about, well, how much do I really need, in retirement? And then, say, for example, you have $1 million, and then if you can get 10% returns on it, which there is things out there, but it's probably easier to get 5% return on it. So it's like 50 to 100 grand a year. So even if you own your house and that, it's kind of like not really like living an abundant lifestyle. So most people don't really even achieve that $1 million in their superannuation. But that's why I'm saying that I really believe people need to give it more focus, so that you give it as long a runway as possible, start investing as early as possible, keep learning, keep growing it, so that when you do get to that time in your life when you do want to slow down, you've got much more choices, much more freedom, and much less stress.
Yeah, I guess that foresight and like crystal balling what the future is to look like is probably something that a lot of people don't necessarily stop to consider.
Yeah.
That a lot of people are sort of interested in the now, like, I'm going to buy these stock now, or I'm going to buy this house now, or this investment property now, whatever it might be. But like that long-term perspective, as you say, of like where you want to be and what that might look like for me, like that sort of really is like the goalposts.
Yeah, I love that you picked up on that. That really is the game changer, as far as most people think, like right now, but you got to think in 4 years or 5 years or 10 year, type cycle. What decisions can I make now that the 10 years down, the 60-year-old version of Greg is going to be very happy that I did that, you know what I mean, sort of thing. So, very, very big believer in playing the long game, not just short. And then one of the things that I found hardest with investing is, well, I'm actually quite good at it, but I see a lot of people struggle with it, is the emotional intelligence. So Tony Robbins teaches that as much as 80% of your success is your mindset and your emotional intelligence. So the mindset is the piece of like, do you have that millionaire mindset? Can you think like long term, and can you plan and learn and make the right moves? and think like a rich person. But then the emotional intelligence bit is like, well, okay, say you bought Tesla stock and it went down 10% today. Is that going to flip you out? Or are you playing a 4-year game, and so if it does a 10% drop today, it's not really going to matter. You could look at it as a flip it on its head. It's a buying opportunity. You know what I mean? That kind of thing. So emotional intelligence is a big, big part of investing that, I think everyone has to experience at some stage.
Well, and I think as well, like that's something that if you're going to go down this path, like if you want to be good at it, you have to be willing to do that. Like you're not day trade. We're not talking about day trading.
No.
In and out within hours, minutes, seconds. Like it's a long-term strategy. And truth be told, I think this, like that concept applies to so many other areas within life. I mean, if you want to go and lose weight and become fit, like you've got to train more than if like, there's all these different things that relate to just zooming out a little bit. Like we're working with clients, we're doing digital. I'm like, guys, you might have had a bad week, but look at the month you've had. Like, month, but look at the year you've had. Like you got to zoom out sometimes to actually see the full picture.
I love that. That's a great way of looking at it. Yeah, I'm 100% consistent. With that as well.
Yeah, exactly. So, I mean, essentially for listeners and viewers out there that are, like myself, like sort of getting right into this. I mean, truthfully, I've always kind of been super interested in it, but like I feel like there's always more to learn. There's always, like it's never a done thing. It's like showering. Would you say the best places to get started with this it would be like YouTube and like just start educating yourself? Like what, like books, like
Yeah, agreed. I think from YouTube is definitely the best spot. But there's a book called Crypto New Rich, which I helped like contribute towards that. That basically would teach you more than 90% of people. And it's got a lot of hand-drawn diagrams in it, which is why people like it. So it explains kind of like how cycles go and what's Bitcoin, and like it's got the millionaire mindset stuff and that kind of thing in it. That's really a very, very good spot to start. There's a book called The Bitcoin Standard, which I think a lot of people sort of treat as the Bible. Because I think in the crypto space, there's Bitcoin and then there's everything else. And Bitcoin is really the safest thing. And then a lot of those other things that people invest in to try and outperform, but generally over a long term, they don't. And this is because they don't necessarily have that digital gold, type component to it that, that Bitcoin has. So as far as like, sorry, you go.
This is like the allure, right, of crypto and where people fall into the trap. They're like, oh my God, look at this one. It's climbed this much in the last week. Let's get on that.
Yeah.
And then at that point, it does become like an emotional purchase, and you kind of more of a gamble where, like when you're looking at Bitcoin, which is kind of like a market in itself, essentially, like you're in it for the long haul. I mean,
yes.
For any of you guys out there that are lucky enough to hold Bitcoin, like it's pretty amazing. Every time I open the app and I'm like, bloody hell, really? Like,
and why so Bitcoin's what's called a hard asset, Matt. So which means that it's got a limited supply. You talked about it before, like as far as inflation. So what a lot of people don't really understand that's happening is the game's kind of rigged against you in that your government, the US government, all these governments, they spend more than they earn. They can't manage their budgets, and they don't run things very efficiently. So if the government just keeps spending more than it earns, what its choice is? It keeps taxing the people, and then they also have to just keep printing more money. And if the government keeps printing more money and putting more money out into circulation, then what happens is that there's inflation, the cost of goods and services, they rise. So you go to the supermarket and it automatically, like it's feeling more and more expensive. So you're getting less purchasing power, and you're also getting debasement of the currency, meaning that the real purchasing power of your like currency to buy hard assets like gold just keeps going down and down and down. So how you can hedge against that, and what you'll see that the smartest people in the world in this space are doing, is they know that, like if the US government has like $37 trillion worth of debt, the Australian government's like $2 trillion worth of debt. The numbers are getting so big that it's very, very hard. All they can do now, it's like, imagine having all these credit cards and you're just trying to pay the interest payments, but that's all that they're doing now. But they're just going to have to keep printing more money. So if we know that they're going to have to keep printing more money, we can either be a victim of the system in that, like, do nothing about it, and we know that our purchasing power is going to keep going down, or we can learn about hard assets. So things like Bitcoin, gold, silver, those kinds of things that have a limited supply or very limited supply, and then buy those and hold them long term, because then...
Quick pause for a second. If this episode's hitting home for you, do us a favor. Please give it a follow on this app, and if possible, please share it with someone that you think would also benefit. This podcast was brought to you by Tradie Web Guys, where day in, day out, we work with tradies and contractors that are looking for predictable, manageable systems to close more jobs and scale with consistency. It's a proven system that's focused on closing more jobs, not just generating more leads. We have loads of case studies and reviews on the website to back this up if you want to go check it out. If you like the sound of predictable, manageable, and consistent growth, click on the link in the description or head to tradiewebguys.com.au and start the conversation. All right, back to it.
As our real purchasing power goes down, we've got these hard assets that are just going to continue to go up. And it's just math. It's just, supply and demand.
What about the conversation around lending, and how would this apply to what we're discussing today?
Do you mean about raising capital, or do you mean about lending, like borrowing against your assets?
I mean, like debt, like basically leveraging debt to increase assets and so on and so forth.
So a lot of people will do it as far as like, say, for example, they've got a lot of equity in their home and then pull some money out and then invest that way. There's another kind of lending where you can, like on a trading platform, and then they'll give you leverage. But the problem with that is those can have liquidations against it. So the markets are highly manipulated. So if it's going up and then you've got leverage saying, hey, I'm putting down $1,000, but I want 10x leverage, treat it like it's $10,000. The problem is if it gets a bit of a drop, then they can sell out your whole positions on you and stuff. So that kind of leverage is dangerous for a lot of people. I think if you don't know what you're doing, like I personally avoid that kind of leverage, but I am open to, for example, having equity built in a house and then pulling some of that money out to play long-term games in known winners. I think it really comes down to individual's risk profile, but especially while you're learning, I would say just use money that you have. And for most people, the best thing that they can really start playing with is they've got a superannuation there. So it's got 150,000 in it or 200,000 in it or something, just taking that over as a self-managed super fund, and then like really learning, well, what have been, like just one question you can just ask ChatGPT is like, over the last 5 years, what have been the highest growth, stocks? What have been the highest growth assets? That kind of thing. And then going deep down those rabbit holes. So like, for example, and one of them has been in NVIDIA. NVIDIA creates, like they do GPUs, which is, so chips of processing for AI compute. So that's where the whole, is the world going more AI or less? More. And then are they going to need more of these compute or less? More. So even though it's got a high price, there's a good chance that it's just going to, keep going. Those sorts of things. So I think ChatGPT is pretty amazing. These days we have access to AI, so there's no excuse to not learn anything now.
Sure. I know as well, though, like I see a lot of people falling over, like overexposing themselves with, using AI as advisory. And like, I mean, I did a test on this recently with, some things relating to stocks and so on and so forth. And conceptually it looked okay, but practically it was shocking. Like if you had gone all in on that, you would have been up shit creek. And I see people doing it with everything from like creating legal documents and employment contracts and just all of this stuff. And it can be pretty risky.
Yeah, absolutely. And I think going all in, as far as that's one thing I have learned is diversify over time. So if you ask a poor person, they'll say, like, diversify a really, really wide bucket of things. But anyone who's really, really built it big, they've built an area of expertise to give them some unfair advantage. So for me, it's like AI tech stuff and Bitcoin crypto stuff. So I diversify, but within those asset classes that I'm good at. I'm not good at property because I have no special knowledge. I don't have any specific advantage, in that space, which is why I don't play there other than parking money there, like in my house or an investment property or something to that effect. So I think that's like build an area of expertise and then diversify, within your area of expertise. But at least by having multiple investments, if one thing drops, you don't lose everything.
I mean, what about, I suppose, the conversation of, so when I'm talking about like accessing debt, right? Like, I mean, I worked for a friend of mine for a while who's like a insanely successful business owner. And he always said to me, he goes, debt is my best friend. I love debt. And he would leverage the bank's money at a certain interest rate, let's call it whatever, 5-4% or whatever it might be, to grow a portfolio which is accelerating at 15% and beyond. And so he's not using his money to grow he's using someone else's money to grow his portfolio in various areas.
Yeah, I do the same thing. Like as far as I've pulled money out of our house and to invest, like from a personal point of view, but I've achieved a high level of skill now. I don't know that I would do that when I was just learning.
Sure.
So
this is one of those conversations that essentially evolves with experience and momentum.
Agreed. I think initially just invest in your own personal money with what you're happy to risk. And I have this saying of everyone needs a cycle. So you need to kind of experience the highs of, like a bull run. So a bull run's an upward trending market, and you need to experience the lows of a bear market, like when a market is in a big correction and things are going down in values, and you need to make sure that you can handle both of those and learn from it. Because ideally what we want to do is be counter-cyclical to everyone else. So the most money is actually made when they say, like, when there's blood on the streets, when the markets are right down. Sometimes the fundamentals of an asset haven't changed, but there's market sentiment, there's a lot of fear out in the market, or governments have done certain things and so that the markets are right down. But that's actually like the good buying opportunities if you know that it's a winning asset. And like what you said before, Matt, of that zoom out, seeing those things, as opportunities. Another part of what I found really like this made a massive difference over time is this concept of dollar cost averaging. So a lot of people, they'll like invest once and then they'll try and, watch it grow. But the real key to it as well is to what I call feed the beast. So just keep feeding it more money, so that you might be buying, sometimes it feels like it's too high, and then other times, if you're putting money into it monthly, for example, you'll really get the lows of it. But by feeding it more money over time, you actually, if you're getting good gains and then you're feeding it more money, you get like an exponential curve that really, really feeds itself. That has been a big component of how I turned a small amount of money into a large amount of money, because ultimately I want to get to the point where I can slow down, and I'm not really that far off, but like being able to slow down and then just choose, how do I want to live my life, and do I really want to hustle hard, sort of between 50 and 70, or am I happy to be more that kind of like semi-retired lifestyle? You still got to have businesses and projects and things you're interested in, because I think like completely stopping, no one really seems to do well, like when they do that. But maybe just to not have that hustle of like, I need to always be working. I need to always be making money, that kind of thing. So it's really about like getting the optionality and freedom. And that's why I like multiple income streams too. So like on the business side, I've got this concept of the multi-leg stool. So a lot of my business is online, but I might have like one primary business, and then I might have like one or two little side hustles that also bring in money. And if any one thing drops off, like I don't lose everything in one go. That's why I think, people that have got jobs these days, especially in the age of AI, they've got the same, like one is the worst number in business. So the get a good, safe job isn't necessarily as good and as safe anymore. That's why I do love the idea of B plus I, business plus investing, especially if you can have multiple income streams as well, and then be building that, like big golden goose with it.
Yeah. So at the end of the day, it's about like limiting exposure.
For sure. Yeah.
Yeah. It's super interesting. It's, I think, especially as I get older and wiser, it's something that I've just been more and more sort of intrigued with and more wanting to expand into. And I think as you guys out there as business owners, if you're not having these conversations, at your own family table, then you probably should be, because there's definitely tools you could be, levers you could be pulling there to make a big difference in the short and long term. I guess a lot of people as well, Greg, they'll turn around and they'll say things like, well, you kind of missed we missed out on the crypto thing. So what's the next thing? And then AI came along. Oh, well, missed out on the AI thing. So what's the next thing? Like,
Yeah.
There's a lot of excuses, you know?
But both of those, like, would it have been better to buy 4 years ago? Absolutely. But the thing is, in 4 years' time, you'll look at where it is right now and go, oh, damn, like, I wish I bought at the end of 2025 sort of thing. So, yeah. So I think sometimes it's really just about like spending time in the market rather than just trying to time the market, like, when to get in and when to get out. Sometimes just spending time in the market and riding it, that 4 years, that 8 years, that 10 years, so that you do compound your money. Because for a lot of people, where they've got $200,000 in superannuation, the real cost of not learning this stuff is you might get to retirement age and have 400,000 in super, and all of a sudden life's stressful, like, whereas if you're 10, 15, 20 years off retirement and you take, like, even this call today as this show as a catalyst, and just go deep down that rabbit hole. Everyone spends time learning their trade, their craft, their whatever, but not really. Only a very, very small percentage of people learn about money and how to make it grow. And I've found that the more you learn about this, it really is life-changing.
Yeah, interesting. Well, I mean, I've got like links to all of your website and your YouTube and TikToks and all that kind of stuff within the show notes. So if you guys that want to head over there, just head to the SiteShed website.com and search Greg Cassar, Cassar. Is there anything that you think we should close off on before we wrap this up, Greg?
No, Matt, I think that was great questions. As far as like final thoughts, I think it's really that realizing, hey, am I a business owner or am I a business owner and an investor? And if I'm not a business owner and an investor, then like flipping that switch, and then what areas am I going to specialize in? And then just doing the research, spending the time. And it's an investment in yourself, because the way I look at it is your mindset and your knowledge are your greatest assets. So start with knowledge and education and then follow it with action, and then, play that long game. And it really can be life-changing for you and your family.
Yeah, I love that. That's great. Well, mate, really appreciate it. It's a good conversation. We need to have more of these conversations, to be honest, because sometimes we just get caught up in the business.
Absolutely.
The things around what to do with the business sort of tend to be on the wayside occasionally. So, no, much appreciate that insight, mate. It's great. And if you guys out there have questions, or if there's anything that we haven't covered off on, which no doubt that is the case, I'm sure I can rubber arm Greg to come back in and answering some of those, in more detail.
Anytime, happy to do questions from the community, or reach out if you've got questions.
Love that. Right. Well, thank you for your time today, sir. Very interesting. And I look forward to reading some of these comments.
Excellent. Thank you, Matt.
Thanks, mate. Hey guys and girls, how would you like all of the value adds left behind from our podcast guest all put together in the one spot? We've pulled every tool together, every template, every resource shared on the show, and we've packed them all into the Tradie Academy. It's free to join, and it's built by the team behind the SiteShed and Tradie Web guys. Inside, you'll get marketing tips, business tools, and first access to future resources, all in one simple dashboard. Just head across to tradie.wiki/pod. That's tradie.wiki/pod. The link's in the episode description. And once again, you just log in once and then you're all set. And if you want to get notified of upcoming episodes, hit subscribe or follow.